Welcome to a Monday report. Last Sunday was a great report. We had all the technicals set up, knew exactly what we're looking for, and killed the whole week. The whole week, just blowout wins. Echo, what is it? What is it? I'm recording right now, and you're making a fuss. You want to say hi? This is Echo, everyone. Anyways, let's hop into the Monday report. So looking at last week, we saw these very sharp downsides from SPY. Those were great trades. We also played a call actually on Thursday, expecting a bounce that could come over into Friday. And we could see that it kind of did, but we actually I tried a short right here and then ended up getting blown out of that, reset, and then made all those losses right back, ending on a great note on Friday. A great week overall, but we do want to take note of the double bottom that seems to be forming here. Now, even though this looks like this could set up for some chop, we also want to note that volatility is having trouble getting above the 30 mark. I would say right now we can see that above 25 has been enough for these big sell-offs in the market. But we're looking to keep above this level. As you can see, like we have these very essential bottoms here. When we break below that, we then start to see, these big climbs up. But above the 25 has been enough to bring this market down. However, if we want to see indications that we could revisit the lows, we will want to see this actually break above 30. And so right now, it looks like we could be setting up for some more choppiness. In the past, we've seen the market be able to, for many weeks, just bounce within certain ranges. This potential range looks like it'd be setting up between 390 and I'd say about 403 currently. So we're going to need to see if we can actually get some significant breaks here. Now, it's important to note that if we can break below 390, this market might take a fat drawdown. It could be a quick path down to 380. Maybe even 370 as well. So let's go ahead and look at the Elliott Waves and see what we're seeing there. Okay, be honest with me here. When's the last time you actually planned out your spending, your finances, or planned for your retirement, or how to preserve the wealth you already have? Listen, you need to call Rob Reed. There's no one better. Learn about different investment strategies to help you create or preserve your wealth. It's for your success. You know you need to get it done. I know you've been pushing it off. But honestly, learning about index-based life insurance, which is basically like a rich man's Roth IRA and allows me to be my own bank, was huge. So if you want to learn more, call the number above or visit cwrpcg.com. So if we look at SPY, and by the way, these aren't my lines. This is the Elliott Wave Absolute on TradingView. This is the indicator that you can use. I wouldn't get used to using this indicator. Every once in a while, I will see just for a quick snapshot of what the technical levels for the Fibonacci's are without drawing my Fibonacci's, okay? I wouldn't get used to using this though, because remember, Elliott Wave isn't as much a science as it is an art. So when we're looking at these, we originally said that this could be a fourth wave, right? And you might even be tempted to say this is wave 1, 2, 3, 4, 5. The issue being there, and that why this is now identified this as an ABC, is that for this to be a fourth wave up, it's retraced too far on this wave, and then for this to be a fourth wave down, it's also retraced too far to be a fourth wave, which is why this is now turned into an ABC corrective wave pattern. Now this could be a wave 1, and then this whole pattern right here could be a wave 1 and it'd be an ABC inside of a wave 1 into a wave 2, and we could be seeing a large wave 3 about to develop, which would indicate definitely a further retracement to the downside, maybe a revisit to these lows here where we hit at 325. Potential definitely could be there. 362 could not be the lows. However, it is important to also remember that in the past, when the market has managed to retrace 50% of the downside, and by the way, this might be easier to talk about on a daily chart, we have never seen the market hit a low like this in a bear market, retrace 50% of that, and then revisit new lows. However, when we look at this weekly chart here, it looks like we have potential to go to new lows, especially if this becomes a third wave. This is a big wave 1, 2, 3, 4, 5. That could look really rough. So based on what I'm seeing here, we'll go to the daily. This looks like there's strong potential for that because we've invalidated the previous charting that we had, even though we're still roughly estimating the same sentiment and direction of the market. It does mean that it's more exaggerated than I potentially saw, which does give reasoning to be cautious about loading up in positions at this point in time, wanting to catch a potential election rally. So we're going to need to see on a weekly basis, is a chop about to develop? Are we going to see a further plunge for wave 3? Is this going to be another ABC corrective wave that's developing? Or is this going to turn out to be a giant wave 1 and then wave 2? Maybe wave 4 to the upside is the election rally, and then need to be cautious of a wave 5 coming in the next year. Now that's on a much larger time frame if we extend that out. We're still going to need to see how this plays out, and we're still going to also want to be considerate of the fact that the TTM squeeze is still turning over. Now, if we're looking for a pivot moment where this comes out, we're going to watch these signals here on this line right here. You can see when this turns red, it usually indicates a big shift in the sentiment of the market, right? Downside, downside, downside. We see these pings here. Suddenly the market is more favored to the upside, and we'll get this huge volume and momentum to that upside, pushing our RSI up higher. So if we're looking for when a short-term bottom could come in, or a change in sentiment of the market, we're going to be wanting to look for these red dots, indicators on the TTM squeeze. At least that's what I'll be looking for, as you know, besides doing some short-term charting on the market as well. Now, remember, in the short term, if we break this 390, we're going to invalidate that chop thesis altogether, and we're most likely going to visit some more lows. And I've drawn some Fibonacci's here for what we'd be looking for. I would expect us, from the highs to lows, we have our retracement levels. I would expect to come down to this 0.382 range, about 381. So earlier I said we'll probably come down to 380. Now we're looking for 381.25 is about where that range would be. Remember, not exact science. This is an art. And this is where I'm going to be looking next if we break through those chop levels. Good $10 to the downside. So that's what I'm expecting for the downside. Now let's talk about some other things besides the SPY index. So if we look at UNG, it looks like the short-term highs are in, and the market's been coming down a lot, like I was talking about last week, how I expect some pullbacks here. However, there was a very important headline over the weekend that we can't ignore. Russia has indefinitely suspended Nord Stream gas pipeline to Europe. This is going to be very important because it could cause a short-term squeeze here. If we just look at some technicals here, we could see that on the daily, we are maintaining above a 50 RSI. On the weekly, it's even more bullish at a 62, not quite to overbought levels. Instead, just showing some bullish indications here. We can see that the momentum and volume is pushing to the upside based on the TTM squeeze here. And if we look at the 30-minute, we can see that we're also pushing to what could be considered a bullish moment here. So overall, we could see that this is actually, if we can pull out to a larger graph, creating a new level, baseline level. These could be the lows. This range here from the 28 to 32 could be the new support that we find to push even higher, especially if we see lots of short interest accumulating at this high. Only a $4 pullback, $5 pullback from the low, and this start to push even higher. Could be a high potentiality here. This is now, in my opinion, a headline-driven trade, and we're going to need to look for that ultimate, the world is ending, it's over for Europe, it's game over, and that might be the signal for what an actual top on UNG could be. Because remember, things tend to never be quite as good or as bad as they seem. However, right now, I am favoring a bullish position on UNG. Just remember that the higher this runs, the more risk that you're going to be taking on with the trade. So for me, I have a pair trade set up with this that favors UNG to the downside while maintaining my upside bullishness on UNG. If you want to learn more about that, visit the Discord. And so now let's talk about oil. Now I've been switching back over to USO over XLE because I'm already diversified in a lot of the energy stocks, and I've been actually building those diversifications as well. If you want to know what stocks that I've been buying as individual picks, you can visit the Discord. Now for USO, we can see that we're really sitting around these lows again. And if we're talking about this super cycle in commodities, which seems to be playing out across the sector, I would say that this is likely going to head to more highs. You can see how quickly this drawdown came in. I had set up a position I want to say around 74. It's not actually fresh on the mind. I actually doubled down on Friday. I'm looking for a turnaround here. We can see on the technicals that there could be indication that this needs to visit some lower figures before we actually get our turnaround that we're looking for. TTM squeeze still to the downside. Daily is not really getting much momentum either direction. Just look at that die off. You're not really getting anything to the up or downside. To me, this shows a lot of indecisiveness from the market. However, when I revisit my fundamentals on this and I'm thinking about all the supply constrictions, I don't see major capitulation here. If there is, we'll need to type stop loss out, but that only makes me even more bullish and want more exposure to oil. So that's what my thoughts are on that. For the upcoming week, it's probably going to be very headline driven. However, I am definitely finding a lot of bullish sentiment here. Now that was a lot of charting and technicals, more than we usually do. I hope you found that helpful. If you have, please leave a like, maybe subscribe to the channel. And now let's break down the economic news for the week. So on Tuesday, we're going to have the ISM non-manufacturing PMI. Last week, if you were just following the inflation data, such as the Chicago PMI, you didn't get a big market move there. However, the ISM last week did get a big market move. Remember, the market loves to watch this. It's something that I've been noticing over the past year. So we're going to want to watch the ISM numbers and see how the market favors those. On Wednesday, we're also going to get a balance of trade report. We have 2 Fed speeches, also important. Market has started to pay attention to these more now that it realizes the Fed's canceled the expectation of a pivot. On Thursday, we have initial jobless claims, continuing jobless claims. We're going to want to see if this is continuing, if this is going to pick up. Not continuing to pick up, it stayed relatively low. 20 minutes before the market opens, however, we're also going to have Jerome Powell come and speak to the markets. And I expect that to likely continue to be hawkish. He's got no data to not be hawkish. Friday, another Fed speech. And so overall for this week, not going to be a lot of economic news. However, we've been seeing lots of headlines, especially over the weekend, about how awful Europe is getting. And if we actually even visit the Discord and look at some of these headlines from Germany, Germans are now looking to firewood as an energy source since natural gas prices are soaring so high. This is not good signs. This looks awful for Europe. And this is preceding the headlines about Russia closing off natural gas to Europe. So that's important to keep in mind that this isn't even as bad as it's likely going to get. Over in the U.S., we've been seeing lots of headlines about California warning of blackouts that could occur, asking people not even to charge their electric vehicles. It's getting crazy out here. And actually, if we go to the Discord, we could see that this is a global trend, a pushback on the ESG guidelines that many people have been very bullish on. If we look at this report from Chile, Chileans have rejected the proposed progressive constitution. So a lot of people are focusing on the indigenous rights that were included or the legalization of abortion. But the big thing here that I feel like they're fighting against is these big climate changes that we've seen. Now, the climate changes that these governments keep incorporating have been horrible for the economy, horrible for the average consumer, horrible for energy prices, and destructive on the poor, whether it's been because of just the straight up rising energy prices that make everything more expensive, or the attacks on food supply, such as the restrictions on fertilizer. They are decimating the population that is already the most vulnerable. And this also leads into that global famine that I'm expecting. The global politics right now have to be some of the worst I've seen in my lifetime. However, I am young, so it's not very far out, but even people with more experience, I just see them baffled by what some of these world leaders are saying. However, what's happening in Chile right now could be a major indication of a movement starting a pushback against a lot of these damaging policies that governments continue to roll out. We've seen also many countries in Europe roll back the decisions on closing down nuclear energy plants. I expect this to really start to generate. There's also another big thing to pay attention to that we've been sharing in the Discord is some exciting new innovations when it comes to hydrogen paired with natural gas or as a separate energy source, and some innovations that are occurring there, a lot from a Australian startup company that could be IPOing soon. So if you want to learn more about all of that, there was a large discussion in the Discord that you can catch up on. And I mean, have you caught all the references yet? It's time to join the Discord if you haven't. Anyways, that'll be the end of the Monday report. I'm trying to keep these shorter. We didn't talk a lot about the news, but I've been producing lots of shorts to keep you on the news. So these will likely continue to be very technical based. If there's a particular company that you would like me to cover in a future report, please leave a comment down below or join the Discord and ask me, and I'll answer it in real time for you. Hope you enjoyed, and I will see you next week.